Hello, this is Mijon from Mikkyushiron University. Let's begin today's Mikkyushi News for July 1. Welcome to Mijun, where we continue to uphold the fundamentals of United States stock investing as always. Finally, my favorite season, July, has arrived. Yesterday and today, the weather here in Cambridge, where I live, has gotten really hot. The morning temperature is already 27 degrees with an expected high of 33 today. In the United Kingdom, most households don't have air conditioners or even fans, so when the temperature goes up to 33 degrees, a lot of families really struggle with the heat. But as you might have noticed from recent broadcasts, I'm actually the type who feels more energized when summer comes. So I think I'll be able to host the show in great condition today as well. Alright, then let's get started right away with today's Big Jushin news prepared for July 1. The Mijun All-in-One membership, which has been running with your enthusiastic support over the past week, and the 50% lifetime discount event for Choice DAC will finally end tomorrow. But with just one day left until the deadline, someone asked a very important question, so I'll start by answering that first. This is a question left by Mr. Yoongyu. Hello, I'm an all-in-one member and an annual subscriber. Thank you as always. Do annual subscribers also need to reapply to get the 50% discount? Or is it renewed automatically? As far as I know, for Choice Stock, existing members are renewed automatically. And also, someone with the username RIL asked the same question below. I also renewed last time, so my membership is valid until July 2026, but I'm curious about what will happen in 2026. I'm wondering if I need to sign up again now to get the 50% discount. About 5 or 6 people have asked this kind of question, and I've left an answer here. As of now, only existing members who renewed for 1 year this time and new members are eligible for the lifetime 50% discount. I'll check with the pending team about the technical issues to see if those who didn't apply for renewal this time can also be automatically renewed with a lifetime discount, and I'll let you know. This is the promise I made yesterday. Now, as I checked, unlike Choice Stock, Mijun membership does offer discounted payments. However, with automatic payments, it's structurally impossible to do installments. But right now, so many people are using the installment service that we can't proceed with automatic payments. Because the credit card companies don't support installments. So unfortunately, if you want the 50% lifetime discount, please make sure to apply for the membership extension through the link below by tomorrow at the latest. I'll put the 50% lifetime discount link again in the pinned comment and the description of this video. Even if it's a bit of a hassle, I hope you'll make sure to extend your membership to get the lifetime discount. I'll make sure to deliver this message to you. Now I have one more message to share with our existing members. Regarding the Mijun All-in-One membership, 50% discount event running until July 2nd, there was a notice stating that those whose membership expiration date is after July 2026 are not eligible to apply for the 50% discount event. Let me show you briefly. I left a message saying you can't apply. This part no longer applies, because this time I promised you a lifetime 50% discount. Originally, people whose dates were after July 2026 couldn't apply for the event because I wasn't very confident. There were people who reserved 2 or 3 years in advance, so it weighed on my mind, but this time I made up my mind and promised you a lifetime 50% discount. So, even those whose expiration date is after July 2026 can now extend their membership through the link. I think it would be good if you could keep this in mind. Today I'll review yesterday's United States stock market conditions. First, if you look at the S&P 500 map. It was an upward market yesterday as well. You can see red here and there, but most sectors and most stocks are colored green. And the tech stocks that we love, the technology stocks, generally showed a noticeable upward trend. That's how you can see it. The situation mirrored that of 2 days prior. The recent upward trend has primarily focused on artificial intelligence beneficiary stocks, summarizing the current situation. If you actually look at the movements of the major indices, the Nasdaq 100 performed the best yesterday as well. The Dow Jones increased by 0.61% and the S&P 500 rose by 0.48%. On the other hand, small cap stocks showed a negative performance. Now, if you look at the performance by sector in the United States listed below, it's the same story. If you look at the very top, you'll see that technology stocks went up by 0.98%, making them the best performing sector within the S&P 500. That's how you can sum it up. Next, let's examine the market breadth. It has broadened. Yesterday, it was 70.17%, but now 71.96% of stocks are trading above the 51-day moving average, which means the momentum is very healthy, at least in the short term. Also, more than 53% of stocks are showing a revival in long-term momentum. Next is the fear index, which is 17.03. Well, it's gone up a little compared to yesterday, but it's still lower than the historical average. Therefore, we can say that the market is still maintaining a Goldilocks atmosphere. The fear and greed index is the same. Yesterday it was 67.66, so it's staying in a very healthy state. If you look at the grid negatively, you could say there's greed, but positively it means the market sentiment is good. But it's not an extreme greed, so there's no sign of things getting overheated, and the stock price is still moving within the greed range. This is actually very desirable from an investor's perspective. Now, lastly, let's talk about choice stock. The market score remains at 84 points. And 84 means we're still in the greed phase. And let me say it again, it's hot, but it's been staying that way. What's important is that it doesn't drop. That's how I see it. Now let's take a look at the performance of Mijune's top picks. Yesterday, while all three major indexes were up, Mijune's top picks also did very well. Strategy rose 5.3%, the highest gain in some time. Second, Palantir was up 4.27%, Trade Desk up 3.84%, Broadcom up 2.34%, Celestica up 2.25%, Uber up 1.93%, B2 up 1.43%, Meta up 0.61%, and Nvidia up 0.15%. Bitcoin was flat as other cryptos declined, with 106,580 trades occurring. Vistra was down 0.63%, Taiwan Semiconductor Manufacturing Company down 0.91%, Credo down 0.96%, Alphabet down 1.29%, Advanced Micro Devices down 1.33%, Amazon down 1.75%, Tesla down 1.84%, Talon Energy down 2.39%, and Nextracker dropped the most, falling 6.77%. Now, if you look at Tesla here, after falling 1.84% yesterday, it's showing an additional 4.57% drop in after-hours trading. As I mentioned yesterday, it's because of the relationship with Trump. Musk and Trump have started feuding again. But there's another article I delivered as breaking news about 2 hours ago. It seems like their relationship is getting much worse. Trump is saying some pretty harsh things. Elon Musk, he said something like, he should go back to South Africa. As you all know, I live in Cambridge. Since I live in an English-speaking country, I sometimes encounter people who act against common sense, and among them, there are people who make racist remarks. One of the things these people say the most is, go back to your country. But now, Trump is saying similar things, which symbolically shows that the relationship between the two is getting much worse. Let's take a moment to read it. The long-standing clash between President Trump and Tesla Chief Executive Officer Elon Musk reignited on Tuesday. President Trump accused Musk of making excessive profits from federal electric vehicle subsidies. Elon has probably received far more subsidies than any human in history, and without those subsidies, Elon would probably have to close up shop, shut down Tesla, and go back to his hometown in South Africa, he posted. There would be no more rocket launches, no more satellite or electric car production, and our country would save a huge amount of money, he said. Maybe we are the Doge Ministry of Information Efficiency. I think we need to take a serious look at this issue here. Because Elon Musk was the head of Doge, so I sarcastically said that actions to save money would be taken through the department led by Elon Musk. Musk wouldn't have just stayed still, right? Through X, I'm literally telling them to stop everything. He's essentially saying, slash everything immediately, I don't want or need your support or money. That's his message. This heated exchange concerns the administration's major tax and spending restrictions, known as the Big and Beautiful Bill. This shows yet another aspect of the ongoing conflict between Musk and President Trump over this issue. That's how we can understand it. Musk has fiercely criticized this bill, warning that it will worsen the federal deficit and increase the national debt. In fact, according to a recently released bipartisan analysis, if the bill passes in its current form, the United States government's debt could increase by $3.3 trillion over the next 10 years. These are the questions being raised. Let me sum it up in one word from Media One. President Trump has singled out various federal subsidies, such as tax credits for electric vehicle purchases and incentives for battery factories, as his top priority for budget cuts. But if in the midst of all this, the relationship between Trump and Musk worsens, you can see that the possibility of the electric vehicle credit being abolished is very high. According to JP Morgan's estimates, just the abolition of the electric vehicle credit is expected to reduce Tesla's annual operating profit by about $1.2 billion. With regulatory credits, an extra $2 billion in losses is anticipated. For reference, Tesla's annual operating profit in 2024 was about $7.76 billion. Therefore, if the elimination of EV credits estimated by JP Morgan and the loss of regulatory credit revenue actually happen, a total decrease of $3.2 billion in operating profit is expected. So last year they made about $7 billion, and out of that, $3.2 billion would suddenly disappear. So you can see that this could be a very big blow to Tesla's annual performance. So in my opinion, Tesla investors like myself right now, it's a bit risky to focus only on the rosy future of robots, taxis, humanoids, and so on. We need to look at how the first federal subsidy policy is moving, and secondly, we should examine the trends in Tesla's brand and demand. And then, we should constantly check the progress of the robot, taxi, and humanoid businesses. Among these three investment factors, it's a reasonable approach to keep adjusting your investment allocation, depending on which one is currently having the most influence on Tesla's stock price. That's what I want to say. You invest in Tesla with a long-term perspective of at least 5 years, not just for a quick 5-month turnaround. There's no need to rush such an investment. As you can see, Tesla's stock momentum has dropped a lot. 11 indicators are suggesting a sell, 8 are neutral, and 7 are recommending a buy. Since the relative strength index has dropped below 50, the trend has significantly worsened. Now let's briefly examine the 1-year stock price chart. The price is facing resistance at $360, having been blocked twice at that level after moving higher. The stock is consolidating within a box range, with support at around $300 and resistance at $360. It's going through an adjustment phase within this range. So in the short term, it's negative. The reason is that the stock price has fallen below the 20-day moving average, which is the short-term trend line. This orange line here is the 20-day moving average. Since the stock price is now below the 20-day moving average, there's now the burden of having to break through it again. That's how you should see it. First, the key support zone is between $300 and $305, and the 60-day moving average is right below that. Therefore, we need to see whether these two support levels can actually provide support. Now, if the $300 level is broken here, then the next support zone is at $275. It's quite possible that the price could fall to that level. Today is the first day of July, and as you know, on the first day of every month, I share 2 pieces of information with Mijun members. The first is the current status of the Mijun portfolio investment stocks. At this point, I share with you the details of which stocks I am investing in, how much weight I have in each, and what my cash allocation is. The second is the current performance of the Mijun portfolio. So, for about 2 years now, I've been investing in a rather unique way. It doesn't seem unusual to me, but many people are quite surprised by the momentum investment strategy I'm using. When the stock price goes up, I buy more, and when the stock price goes down, I actually cut my losses. Now, I'm doing this to prove that you can achieve healthy returns even with momentum investing. I also share the performance of my Mijun portfolio every month on the Mijun YouTube channel. So let me share with you the performance of the Mijun portfolio as of July 1st, 2025. Now, the first chart shows the investment performance over the past year. If you look at the period returns, it was minus 1% in the third quarter of 2024 and plus 35% in the fourth quarter of 2024. And this year, the first quarter wasn't very good, with minus 22%. But in the second quarter, we've been seeing very good returns, with plus 26 and 15%. So if you look at the performance over the past 12 months, the return is plus 31.74%, and the profit for the period is 224.5 million won. You can see this as the income I've made from stock investments over the past year. That sums up the investment performance for the past year. Next, I'll share the results for June 2025. So if you look at the investment profit and loss, you can see that I made 87,829,000 won in profit from investments just in the month of June. Now, if you do the math, the monthly rate of return is 8.72%. Of course, since it was over 10% in May, it's a bit lower than in May, but still, you can see that it's a healthy rate of return. Let me say it again. The ultimate goal of the Mijun portfolio is to reach 3.3 billion won, and to achieve this goal within 15 years by 2035, we're aiming for an average annual return of 20%. When I say I'm aiming for 20%, some people think, is that all, just 20%? Of course, last year my return was over 100%, and the year before that I recorded about 60%. So for the past 2 years, the returns have been exceptionally high. But it's hard to expect these kinds of returns to continue consistently. So, in my opinion, the United States stock market offers an average annual return of about 10%, and I think aiming for around 20% is appropriate for us. Let me briefly show you just how much wealth you can create if you achieve an average annual return of 20%. Now, if you look here, I've written compound annual growth rate. Let's see what happens if you increase your returns by 20% each year with compound interest. Now, let's assume that your investment capital is only 10 million won. Among you, in your 30s, there are probably many people who invest around 10 million won. So, if you invest 10 million won and make a 20% profit, then next year, it will increase to 12 million won. But let's change this period to 5 years. Then 10 million won increases to as much as 24.88 million won, about 2.5 times more. And since we're still young, let's try investing for about 10 years instead of just 5. If we do that, 10 million won grows to 60 million won. That's a 6-fold increase. You can achieve this kind of result with just 10 years of investing. But among those watching this broadcast, there are many who will invest not just for 10 years, but for about 15 years. If you do that, it increases by about 15 times. Now, if you're someone who's only in your 40s and can invest for 20 years, this applies to you. If you invest 10 million won, it becomes 380 million won, which is a 38-fold increase. And if you can consistently invest for 30 years, 10 million won becomes 2.37 billion won, which is a 237-fold increase. So an annual return of 20% is an incredible goal. If we can keep this up consistently, we can create tremendous wealth. So if any of you are expecting a 100% return, if you have such expectations, you're likely to invest in very high-risk assets. If that happens, you could end up facing the worst-case scenario where your investment suffers significant losses along the way, and you can't enjoy the benefits of compound interest. So, I'd like to suggest that you take a more long-term perspective and aim for an investment return of 20% and work hard toward that goal. Next, we'll move on to the article about Palantir. Palantir's stock price jumped over 4% in the United States market yesterday. There was a good reason for that. In my opinion, it's not just a big positive factor, an extremely significant one has emerged. Let me explain the details for you. The news is that Palantir has selected Accenture's Federal Services Division as its primary implementation partner for United States federal government clients. The United States federal government, with its many departments, is the client in this case. All these departments can be considered as individual clients. And this time, the partner they formed a partnership with is Accenture. Accenture is a global company, mainly focused on consulting. That's how you can see it. Among those, it's specifically the Federal Services Division, so you can understand it as having formed a direct partnership with the departments that provide federal services. Yang San stated in a press release that the two companies will address the top operational priorities of federal agencies by deploying commercial-grade artificial intelligence-based solutions, optimizing key workflows, improving corrections, strengthening decision-making, and even enhancing operational resilience. It's written in a very complicated way. To put it simply, they're planning to maximize productivity and efficiency by using Palantir's artificial intelligence. That's how you can see it. And here comes the most important part. As part of this newly formed partnership, Accenture Federal is the division of Accenture that handles federal services, as I mentioned earlier. Now here, 1,000 experts from the data and artificial intelligence team will receive training and certification on Palantir Foundry and the artificial intelligence platform, building the capability to provide top-level joint advanced automation solutions for the entire federal government. So, what this means is that among the many employees at Accenture Federal, they will select 1,000 data and artificial intelligence experts. They will train them on Palantir's Foundry and artificial intelligence platform. The purpose of this training is to enable them to sell the Palantir platform, as you are responsible for the sales. That's how we can interpret it. The partnership begins with the collaborative development of 3 key solutions. Here, the first one is called Enterprise Edge Data Fusion. Edge data is the opposite of cloud data. The cloud is centralized, right? Centralized data means gathering all the data into the cloud. Edge refers to data that is scattered across different locations. So what we're trying to do is to fuse these together. That's how you can look at it. And the second is prediction-based supply chain management, which means using Palantir's artificial intelligence to manage the supply chain. Third, they also want to manage operational finance and intelligent treasury. This allows them to provide a comprehensive view of an organization's budget and expenditures across multiple systems. That's how you can see it. All right, then let me wrap up with a final word from Mijuan. So what about this news? Beyond a short-term rise in stock prices, I think it also has significant long-term implications, because it could serve as an important indicator of Palantir's fundamental growth strategy and its potential for market expansion. That's how I see it. As we all know, Palantir's software is very powerful, almost unrivaled. But the problem is that the process of installing and optimizing it for the customer system, in other words, the implementation, is extremely complicated. That's why the number of companies using it isn't in the thousands or tens of thousands, it's still only in the hundreds. So, Palantir's software is something that requires a very complex implementation and a process of optimization to fit the system. This is something we need to remember. That's why Palantir has relied on a small number of specialized personnel internally, because they create what is needed through direct meetings and then sell it this way. It's a sales process that requires a lot of money, time, and alignment. That's how you should see it. What that means is this. It means that the speed of sales growth is bottlenecked by the pace at which you can expand your workforce. As you continue expanding your talent pool, costs will rise significantly. That's my point. But in this context, Accenture comes into play. That's how you should see it. Accenture is a global giant in the fields of system integration and consulting. Thus, they possess a vast talent pool. What does it mean when 1,000 experts from Accenture's Federal Services Division will be working with the Palantir platform? It means that Palantir gains a massive sales and execution force, allowing them to handle numerous United States government projects simultaneously without having to increase their own workforce. I see it as having the same effect as suddenly increasing your sales team by 1,000 people. If that happens, it's a key factor that can accelerate revenue growth. That's how I would evaluate it. Now, from the customer's perspective and the government's perspective, if Accenture, which already has a trusted relationship, carries out the project, what I mean is Accenture isn't just any company. They are experts in federal services, so you can see them as people who already have all the necessary connections. So, when business professionals from Accenture's Federal Services Division, who already have established trust, carry out this project, the burden and risks associated with adopting Palantir's solution are reduced, making it much easier to secure clients. We can expect these kinds of effects. Investors have had one question about Palantir. They only have a few hundred clients, not thousands or tens of thousands. So the most important question is whether Palantir's business model can really scale up massively, like Amazon Web Services. This partnership is expected to be a positive answer to that question. Of course, they must have shared the revenue generated through the partnership. Depending on what percentage SNTUO gets and what percentage Palantir gets, Palantir's direct profit margin can vary. From my perspective, I believe the increase in total revenue will far outweigh the decrease in profit margin, leading to significantly better overall results. Therefore, I would like to say that a major driving force has been created for Palantir's government sector revenue to continue growing in the future. This is Palantir's momentum. Out of the 26 indicators, 4 suggest selling, 9 are neutral, and 13 recommend buying. The momentum is still alive for now. And if you look at Palantir's stock trend, after hitting an all-time high, it's slowed down a bit. It's been going up and down repeatedly. Currently at $125, the stock has been reaching new highs and retesting between $135 and $140, moving sideways after surpassing the $125 level. So at this point, the important part is this orange line right here. In the past, it kept going up along this orange line for a long time. The orange line acted as a strong support level. So right now, the orange line, which is the 20-day moving average, is at $135. We need to see if it can keep rising while holding above this, $135, the 20-day moving average. The next content we have prepared is an article related to Bitcoin. In this article, it claims that Bitcoin can continue to maintain an average annual increase of 60% going forward. Earlier, we saw that even if we make just a 20% annual return from stock investments, we can generate tremendous wealth. But if we can make a 60% return, something incredible happens. Now, I've changed it to 60%, and if we assume we invest for 5 years, let's say we invest 10 million won and wait for 5 years without adding any extra funds, then that 10 million won becomes 100 million won. So if you maintain 60% for 5 years, it goes up tenfold. You can see it that way. Now let's take a look at why Bitcoin could go up tenfold over the next 5 years. Over the past month, while the stock market hit all-time highs and newly listed initial public offering stocks surged, Bitcoin remained relatively quiet. However, the argument is that this could ultimately work in Bitcoin's favor. If you've read this far, you might not really understand what this is about. According to Coinmetrics data, this leading cryptocurrency, Bitcoin, has not reached a new all-time high since May 22nd. It means it's not running as fast as the stock market, but Adam Parker, the founder of Trivariate Research, is an expert. It seems that Bitcoin is gradually gaining support from traditional financial institutions rather than moving like a meme stock. Therefore, he analyzes positively that this is making it increasingly attractive. It seems that Bitcoin is now being traded somewhat differently than in the past, and its correlation with high-quality growth stocks is increasing, rather than with highly speculative high-growth stocks with which it used to have a high correlation. Nvidia and Bitcoin are often associated with high-quality growth stocks. Let's compare their stock price trends. This is a 5-year chart. Bitcoin is shown here in orange, and Nvidia is in blue. Nvidia has performed a bit better over the past 5 years. Nvidia went up 15 times, and as we just saw, Bitcoin increased by 60% each time and rose 10 times overall. But if you look at the stock price trends and price movements, they're actually quite similar. So now we might expect that Bitcoin will move together with Nvidia. Anyway, what we're saying now is that Bitcoin is moving more like a blue chip stock compared to before. There's even more evidence that mainstream investors' demand for Bitcoin is increasing, and that's the exchange-traded fund flows. Recently, Bitcoin itself has been trading within a range. But what about the iShares Bitcoin Trust, IBIT exchange-traded fund? It has attracted over $4 billion in funds over the past month. While Bitcoin has been moving sideways, the exchange-traded fund shows a significant influx of capital. That's the current topic of discussion. So Adam Parker says, if Bitcoin continues to be incorporated into traditional finance, the fundamental supply and demand dynamics of this digital coin will lead to further increases. This is the law of supply and demand that I've always talked about. If the supply doesn't increase but the demand keeps going up, the price has no choice but to rise. Therefore, Bitcoin is gradually being incorporated into traditional finance, and as that happens, the number of investors increases. As more and more investors join in, demand will surge, and the price of Bitcoin will inevitably rise. This is the argument that can be understood. Here's where a very interesting argument comes in. Now, The number of millionaires on Earth far exceeds the total supply of Bitcoin, which is 21 million. So, there are more millionaires than there are Bitcoins, and in the future, the number of people who will become millionaires will increase faster than the rate at which Bitcoin can grow. The reason I'm telling you this is because a millionaire refers to someone who has more than $1 million. Well, that means assets of about 1.5 billion won or maybe around 2 billion won. Now, if you have 2 billion won, it's possible that about 10% of that could be invested in Bitcoin. That would be about 200 million won. So, what I'm saying is that a millionaire is someone who has the power to buy at least one Bitcoin. So, since there are more millionaires on Earth than there are Bitcoins, and the number of millionaires will keep increasing in the future, this will eventually create a supply and demand imbalance. The number of Bitcoins increases very slowly, but the demand will keep surging. This is what I'm talking about. And now, because of the legality of Bitcoin, which can be held through ETFs and also stored by financial advisors, some investors are taking notice. They predict that, just like Bitcoin has done over the past 15 years, it will be able to maintain an average annual growth rate of 60% in the future as well. The world of cryptocurrencies extends far beyond just Bitcoin, which is the focus of my discussion. It's also possible that speculative trading has moved elsewhere. Some of the funds might have as well. Some people might think, Bitcoin has become too heavy now, it's not attractive anymore, I should invest somewhere else. A prime example is Circle Internet Group. Right now, a lot of funds are moving into meme stocks. That's what people are saying. All right, I'll wrap it up with a word from me, John. Let me say this again. The reason I highly value Bitcoin as an investment is because of just one thing, the law of supply and demand. And this investment logic for Bitcoin continues to get stronger. What does that mean? There's a limit to how much the supply can increase. And as the halving keeps repeating, the increase in supply keeps getting smaller. But demand, as we can see right now, is increasing exponentially. Therefore, according to the law of supply and demand, the price has no choice but to go up. That's the logic I want to present. Now let's check the momentum of Bitcoin. Out of the 26 indicators, 4 suggest selling, 7 are neutral, and 15 are indicating a buy. Now, if you take a look at Bitcoin's price chart, for a moment, you'll see we're at a very important moment. Here, it's at $108,000. It was blocked once, twice at this point, but this time it broke through. However, after breaking through, it dropped a bit again. So right now, it's fluctuating around $108,000. Therefore, how the Bitcoin price moves here is very important right now. The 20-day and 60-day moving averages are converging, indicating a potential trend shift. So if it goes up from here, it can break through the previous high and the upward trend can get stronger. But if it falls from here, that means it could break below the 20-day moving average and the 60-day moving average, and there's a possibility of a complete plunge. But if you look now, a triangle is forming. When the lows keep rising and the highs stay the same like this, we call it an ascending triangle. And usually when an ascending triangle converges, there's about a 70% chance of an upward breakout. So I'm cautiously optimistic that the uptrend will continue with a breakout here. The last content prepared for today is today's United States stock video. In today's United States stock video, Coinbase appears. Although it's not the main top pick, I think it's a stock that many of you are interested in. Now, today's video is very short. Let's hear the outlook on Coinbase for 1 minute, and then right after that, we'll also listen to Tony's outlook on United States stocks. Tony, who recently predicted the sharp rise in the United States stock market accurately, will also share his thoughts on the future of the United States stock market, so I hope you watch this video until the end. That's it for the first broadcast of July. If today's broadcast was even a little bit helpful for your investment activities, I would really appreciate your valuable likes and comments. Let's all keep fighting together until the day we can all retire through investing in United States stocks. Have a happy day. Thank you.
Please explain the pace. Yes, Mike? Coinbase's stock rose by more than 40% in June, marking its best monthly return since November 2025. This is the first three-day rally since 2023. It's the S&P 500's best performer this month and the sole stock to double in price in Q2. The rally's main drivers are the United States Senate's Genius Act stablecoin regulation bill, Circle's successful initial public offering, and its S&P 500 inclusion in late May. Another noteworthy point is that investors' attention is now shifting to Coinbase's Beihieji, the Weathercaster, and the use of non-tradable cryptocurrencies. In the second quarter, Coinbase's trading volume has been on a decline. This is usually seen as a risk, but analysts say that Coinbase is very closely linked to Circle's earnings, and the market has not yet fully reflected that value. Now,
shall we talk about the market situation for a moment? All of the NASDAQ 100 hit record highs again on Friday. Tech stocks are showing their best quarterly performance since the second quarter of 2020.
The bull market is still considered the most hated Visa rebound. That's because many investors sold their stocks at the bottom after prices plunged until April. However, when the BX index goes above 60 and then falls below 30, it usually signals a definite bottom. Currently, market visibility has also improved. The impact of tariffs was not as significant as expected, and the effect of inflation was also minimal. In fact, aside from tariffs, inflation is much lower than the market expected. Even though the Fed is keeping interest rates unchanged, the bond market doesn't believe it. Looking at the 2-year yield, the market thinks the Fed has already missed 2 opportunities to cut rates, and the 10-year yield has now dropped to 4.2%. This means that over the next 12 months, the Fed could implement more accommodative policies, which could be positive for the stock market. 3.
They say that this massive $3 trillion bill will increase the deficit, so why is the 10-year Treasury yield actually falling? That's right. This shows that the market doesn't judge the sustainability of United States debt based solely on the budget. There are a lot of hidden values in the United States balance sheet. These include natural resources, government buildings, and even undervalued gold reserves. Despite concerns, there is still demand for United States Treasury bonds. That entity will be stablecoins. Stablecoins are becoming a substitute for foreign owners of government bonds. Is it temporary? Once it reaches a certain level, does it operate in an independent world?
It depends on the situation. Currently, the stablecoin market size is about $250 billion, but the total dollar circulation is nearly $10 trillion, so there is a lot of room for growth. In fact, many stablecoin transactions take place outside the United States, so in a world based on stablecoins, the dominance of the dollar could actually become even stronger. However, the 10-year Treasury bond yield is at 4.2%, which means that the bond market is not seriously concerned. But I thought that bond market participants would eventually say they couldn't take it anymore. I think the bond vigilantes are right. We shouldn't be running such large fiscal deficits. It's not at a level where the sustainability of the fiscal framework itself is being threatened.
Could it change? Usually these kinds of changes come without warning.
The bond market operates on trust, and there could come a moment when the market loses that trust. As long as the dollar holds up, it's okay.
Jamie Dimon is worried too, right?
Pay close attention to Jamie Dimon's words, as he has a thorough grasp of the whole economy.
Are you seeing the year-end target as 60 or 100? As of Friday, that's about an 8% upside potential.
That's right. I understand why you don't see much upside potential, but I think the market could go up to 6.6 times. There's more room for the market's price to earnings ratio. We've already experienced 5 shocks. COVID-19 supply chain inflation, the fastest rate hikes in Fed history, and even the tariff shock. There have been 5 shocks in 5 years, but corporate profits have continued to grow. If a stock continued to make profits even after going through situations like this, we would have given that company a much higher valuation.
Jim Chanos said it reminds him of the dot-com bubble. Of course, it's quite different in terms of numbers and performance. Back then, companies like Cisco and Lucent were building internet infrastructure, and it's good that there's a lot of capital spending on artificial intelligence now. But he warned that this trend could change suddenly. Me too.
I was a tech stock analyst back then, but the situation now is very different. At that time, companies like Yahoo were raising venture capital just to build web pages, and equipment purchases were also for building those web pages. But today's artificial intelligence has real use cases. For example, the cost savings that companies achieve by replacing human labor can be measured in numbers. If artificial intelligence can no longer provide cost-saving benefits, that might be when we see a real bubble. In fact, artificial intelligence may be currently undervalued.
The beginning is important. Be ambitious and grow little by little every day. Enjoy today's journey. Even if dark times come, I'm not afraid. Retire with United States stocks.